The Securities and Exchange Commission has proposed a regulation giving investors a vote on executive pay. Harvey Pitt, the former SEC chairman and the founder and CEO of Kalorama Partners, joins us from Washington with his take on sayonpay. Mr. Pitt, welcome to Bloomberg. Always good to have you on.
Good to be with you, Mark.
Is this going to be an effective tool to prevent excesses?
Well, I think it will be. In the first place, when companies have to make disclosure, advisory votes are one way of ensuring that shareholders know what's going on. I think this will have a very definite impact on how corporations and shareholders view these critical issues.
Mr. Pitt, this sayonpay vote, it's going to be non-binding. So I guess that asks the question then, what's the point? The vote's going to be, in fact, self-implementing, meaning that companies can, in fact, decide to ignore it if they want to.
That's a fair question, but the experience we've seen has been that what starts out as an advisory vote takes on more than an advisory tone. For example, if you put something up to the shareholders and 60% of those voting say the compensation is excessive, management and the board would be foolish to ignore that so-called advisory vote. So these aren't really advisory votes if there's enough voting power behind each of them.
Okay, so is the onus then on the companies, on the boards to show that the compensation is justified, or is on the shareholders to prove that the compensation is not justified?
No, the shareholders have no burden. The real problem is that directors should be ensuring that the executives who are paid well are paid for performance, not merely for a pulse. And unless there's proof that the payments have really produced benefits to the shareholders, that will be a hard sell, and that's the whole point behind these new rule proposals.
Mr. Pitt, when you were chairman of the SEC, was there talk at that time of perhaps taking the lead or being in the forefront of this? I guess the issue at this point in our time, especially with the economy being what it is, taking the lead for shareholders' rights.
Well, when I was chairman, I was very concerned that institutional portfolio managers have set policies on how they would vote proxies and then report on that after the fact to the shareholders. That is now being expanded in the current set of rules. I think those who invest through a pension plan or an investment company, mutual fund, or what have you, have the right to know how those who manage their assets are actually using them.
In this climate, as you know, a lot of Americans out of work, a lot of Americans looking for work, a lot of Americans losing their homes. In this type of climate, they see what's going on Wall Street. Wall Street seems to have its pulse back. You see salaries on the rise. You see bonuses on the rise. You mentioned just a few moments ago that companies would be foolish to ignore this non-binding vote. At least from a PR perspective, would they be wise to accept this non-binding vote?
Well, it really depends, and what it depends on is really the process first. What boards need to do is decide what it is they want from each of the senior executives. Then they need to figure out how to compensate for each of those. And finally, they have to have a method of determining whether they got what they paid for. People deserve to be paid well for difficult jobs. The problem is basically making certain that you've gotten what you paid for, and that's where boards are going to have a lot of hard work.
Mr. Pitt, we have about 30 seconds left. Companies have the option of having the sayonpay votes at least once every 3 years. Is there a possibility that companies in the off year could then use that opportunity to, I guess, increase compensation because that's not a year that a sayonpay vote's going to be held?
I don't think so. I think that would be foolish. Full disclosure is the name of the game, and whatever arrangements there are will have to be disclosed.
All right, Harvey Pitt, the former chairman of the Securities and Exchange Commission, now founder and CEO of Kalorama Partners in Washington. Mr. Pitt, always good to have you on. Thanks so much.